and welcome to The Trade. Before we get into the technicals, let's have a quick look at what traders are watching. US President Trump says he'd likely seek a commitment from Iran to end its nuclear ambitions at talks next week. President Trump has also called for Israel to pardon Prime Minister Benjamin Netanyahu or cancel his trial on corruption charges. Meanwhile, President Trump has toyed with the idea of selecting and announcing Federal Reserve Chair Jerome Powell's replacement by September or October, this according to the Wall Street Journal. And Jay Powell says the Trump administration's tariff plans may well just cause a one-time jump in inflation, but the risk that it could cause more persistent inflation is large enough for the central bank to be careful in considering further rate cuts. Well, of course, that all weighs in on the currencies. Nick Twidale from ATFX joining me now. Nick, great to see you.
Thanks for having me.
I want to talk about the Aussie dollar. That's above 65 cents.
It is back above the 65 cents, and considering what you've just said from Jerome Powell's comments, you wouldn't be expecting to see the dollar, the US dollar, hitting fresh lows, but it is across the board, and we're only 20 or 30 points away from the annual high for the Aussie. So really good strength. We did see a massive dip just below 64 cents earlier in the week on the back of all the geopolitical updates, but we've bounced straight back up to highs. So
where to now when we're looking at that chart?
Well, this is the slightly longer term chart. I do think we're going to fill in that gap up to the sort of 66 level now, because it just won't go down, will it, the Aussie? And most of the other currencies, the majors, as we'll see in a bit, they're breaking into fresh highs, and the dollar index has just hit into fresh lows just this morning, actually. So I think we're going to see the Aussie edge higher, and of course I have to caveat it all with we do not know what President Trump is going to say next.
Don't know if he does sometimes either. All right, exactly. Look at the yen. We were talking about that's Japan, about the only country that has an inflation problem at the moment, or a deflation problem. What are you seeing in terms of the yen?
It's been hugely volatile, and this is the daily chart, and even on that daily chart you can see that spike up to 148 is crazy. It did, I think, 146.20 to 148 in a matter of hours, and then we're back down to 145. So massive volatility in the yen. I think that's going to stay fairly consistent. They are in a rock and a hard place, aren't they, the Bank of Japan? So inflation's still a big issue for them, tariffs still a potential issue. Maybe in the next couple of weeks we get a bit of clarity on the tariffs. Clarity is something we're not getting anywhere in the market at the moment. I mean, if, a week ago we were in the middle of a potential world war. Now we're looking back to tariffs. We're jumping on a daily basis, sometimes hourly basis. Yen will continue to be volatile. I would be fading moves back if we get anywhere near that 148, or to be honest, that trend line which is coming in around about 147.50 now.
And of course, amidst the last couple of weeks we've had, where we have been teetering really on what could have gone a much worse scenario than what we've seen, the euro's very much been in favour. We've got their defence spending bill as well announced at NATO. What are you seeing in terms of the technicals here? Well,
we've seen, and that's kind of one of the big moves that we've seen overnight, is that break of the annual highs, and it's taken out that topside trend line resistance. If we can maintain that break from a technical perspective, and we're nicely through it, we're a good 40 or 50 points through it, it does open up the way for the euro moving back up to 120 in the medium term.
All right, and a quick look at cable as well.
Similar pattern with cable as well. More volatility in the cable as always, but we've broken into fresh highs in the Asian session, which is unusual to see those big moves. But I think some weak stop losses would have been attracted in thinner liquidity, and we've popped up there. It does open the way, I think, for 140 in the cable, similar to the euro. Caveat it all with anything we get from tariffs. If we see any worsening in the Middle East, in the tensions there, then the dollar probably will be bought, and we may see it drop back into range. But from a technical perspective, if it manages to stay back above here on the dailies for the next 24 hours, then it's probably going to move higher.
And of course, a lot of movement in safe haven. So you look at the Swissy, for example, but it looks like the dollar's support against that could be about to break.
It was a crazy move on Monday, really, when on the open, after the US had struck Iranian nuclear facilities, a lot of people would be expecting the Swiss to appreciate. The Swiss has appreciated. We would have expected the yen to appreciate, but we saw the dollar move massively. So correlations and the usual patterns that we see in markets aren't always fitting. But I've thrown the Swiss in here because, once again, that's just sitting just off. The dollar Swiss is just off those annual lows. A break there really does open the way, probably down to 78. It's going to be very interesting to see. And once again, the Swiss could be in favour both against the euro and the dollar. for its haven facilities.
All right, always great to chat. Thank you, Nick. Nick
Thank you.
Twidale from ATFX. That does it for this edition of The Trade. Be sure to join us next time.